Hello everyone, welcome to today's lecture. So today, like previous sessions, we will be continuing the Essay 300 series. Now before start of the lecture, I'll reiterate again. One, that this time we are covering the MCQs or practical questions instead of the whole standard. Second, today we will be in the coming lectures we will be discussing the questions. For that, I want you guys to go and look on to the previous lectures, read the study material, come up with your doubts, come up with your questions that we can solve it here, and then accordingly we'll take this session. So I want you to look onto the previous lecture so that when even I'm also solving a question, I'm also discussing a question, I expect you guys to answer, and you will be able to answer once you have gone through those lectures and have read the study material. That is very, very important. Okay. And then only you will be able to understand, okay, what we are discussing, what we are, discussing in that particular question, or what topic it is about, and, the details of that particular topic. So that's why I want you guys to, go through the lectures and the study material before start of the lecture itself. Okay. So in the last lecture, we discussed some questions on the Essay 300 series. Now today I will be continuing the Essay 300 series plus Essay 450. Okay. Before I jump onto the questions, again I'll provide a quick revision about Essay 3 and 315. Then I'll be providing after that quick revision of Essay 330. Okay. Now when I talk about Essay 315, Essay 315 talks about identifying and assessing the risk of material misstatement through understanding the entity and its environment. So what it talks about, that it talks about how to identify what are the risks within the entity and what we are required to do, when we are required to understand the entity. So that is the part of Essay 315. Essay 315, describes the responsibility of the auditor to identify and assess the risk of material misstatement. Okay. And for that, it places a responsibility that we need to understand the entity and its environment, including entity's internal controls. So first, we are required to understand the entity and its environment. We are required to understand entity's internal controls so that we can identify and assess the risk of material misstatement. Okay. Now, we need to identify a risk of material misstatement not only at the financial statement level, but at the assertion levels. And when I say assertions, it's not only for the account classes, it's not only for the balances, it's for the disclosures also. So again, assertion level, not only at financial level, but when I talk about assertion level, it is not only for the financial statement line items, it is not only for account classes, it is not for balances, it's for all plus disclosure. Okay. And the second thing, that is to create a basis for designing and implementing the response to the assessed risk. Now, what is this? Now, when I talk about response to the assessed risk, that is something once you identify a risk. Now, how want you respond to that? How want you test the areas? How want you gather evidence whether there's a risk of material misstatement or not? The conclusions and everything. And when I talk about, okay, what is the response? It talks about the Essay 330. So this is something you can say Essay 330. Creating a base for application of Essay 330. Okay. Now during the risk assessment procedures, auditors are required to identify and assess the risk of material misstatement. And for that, they need to gather information, and they need to perform analytical procedures. They need to observe. They need to do observe and inspection, discussions within the teams, and to understand the entity and its environment. The auditor is required to understand the relevant industry knowledge, regulatory knowledge, applicable financial reporting framework knowledge, the nature and ownership of the entity, its ownership, its operations, governance structure, future investment plans, selection and appropriateness of accounting policies, entities' objective and strategies, review of entities' financial performance, understanding of IT. Okay, only when I'm evaluating the internal controls, I'm understanding the internal controls. Okay, I need to understand evaluate internal controls which are relevant. Okay, I need to evaluate their design and operating effectiveness, including monitoring of those controls. I need to obtain understanding of control environment as such a whole, like whole control environment, how it is operating, what is the tone of the management with respect to the control environment. Okay, I need to perform risk assessment procedures. Now, risk assessment procedures, so there are two things. One, I need to understand what is the risk assessment procedure entity is performing. Okay, then I need to perform my own risk assessment procedures. So if entity is performing any risk assessment procedure, then I need to understand what those procedures are, how entity is identifying any risk that is critical, is high, or a fraud risk. Basically, when I will perform my risk assessment procedure, then what will happen is I will understand what are the current risks, what are the business risks relevant to the financial reporting and financial statement assertion levels. I'll estimate the significance of risk. I'll assess the likelihood and magnitude, and then I'll create a response as per SA 330 for each of the risks. So that's a continuous process basically. And then again, if I identify significant risk, then I need to understand whether it's a risk of fraud. Okay, whether it's a risk related to legal changes, regulatory, economic conditions, and like that. It could be related to complex transactions like M&As. Okay, or it could be related to related party or unusual business outside transactions. It could be some kind of some such kind of risk which could be significant and could be fraud risk also. But again, depends upon the other information that is available. Okay, so that was a brief about SA 315. Any of your doubts that you want to guys ask with respect to SA 300 series before I start the questions? Okay. No issues. Okay. Now, if no doubts, then let me start the questions for today. And I want full participation. So I want answers from your side. Okay. I want you to give answers so that you will be able to understand the topic very much and in much clear. Okay. Let us see one question. Mr. Subramaniam, the engagement partner, performed the risk assessment with the audit manager for the statutory audit of Ocean Waters and Beverages Limited. Once the risk assessment was done, the engagement partner and the audit manager identified high and medium risk areas and developed an audit plan to address those risks. For low risk areas, the audit manager delegated the responsibility to other key engagement team members for preparing an appropriate audit plan and to respond such low risk areas. So he gave the responsibility to other key engagement team members for low risk areas. Okay. Then once the entire audit plan was ready, the engagement partner informed everyone about the applicable financial reporting framework to the entity. Okay. Once the entire plan was ready, the engagement partner informed everyone about the applicable financial reporting framework of the entity. Now, Mr. Shashank, one of the audit executives, requested the audit partner to share the methodology and the process followed by the engagement partner and the manager to identify high and medium risk areas. However, the engagement partner was of the opinion that the identification and assessment of risk is a very complex and challenging process. The process followed and the assumptions taken during the risk assessment are required to be kept confidential. Kindly comment on this in the light of the standards on auditing issued by ICA. So Mr. Shashank asked for to share the methodology process followed by the engagement partner and manager. However, engagement partner was the opinion that the risk assessment is a very complex and challenging process. Procedure follows and assumptions taken during the risk assessment are required to be kept confidential. Hence, they cannot share. So kindly guide Mr. Shashank or Mr. Subramaniam, the engagement partner, with respect to the whether it is correct or not. If it is correct, then what Mr. Shashank should do. If it is not, then what Mr. Subramaniam can do. Come on, guys. I want answer from your side. Who is correct? Mr. Shashank or Mr. Subramaniam? The audit partner or the audit executive? Whether this is the confidential information, if yes, then how Mr. Shashank can get the information? If no, then what Mr. Subramaniam can do in the current scenario? Come on, guys. So you need to answer considering the requirements of SA. I'll say 315. Okay. Now you need to understand what are the requirements of the SA. Okay, with respect to the risk assessment procedures. See, it's we are talking about the risk assessment procedure over here. What are the requirements of the risk assessment procedure? How it is required to be followed? It's not only the identification of the risk, but there are few things more. Okay, let's say for example you follow a risk assessment procedure. Can you disclose it to the team, or are you required to keep it confidential? Absolutely correct, Janvi. Very good. Absolutely correct. Come on, guys. I just received only one answer. See, basically, what we are required to answer over here is what are the things that we are required to do for a risk assessment procedure. Okay. Now, there are few things that are required by the standard itself that are required to be performed during the risk assessment procedure. It places a responsibility. Now, you tell me what that responsibility is. Okay. So, basically, before I go to the answer, I'll explain you the concept over here. Now, as per para 6 of the SA 315, para 6 of SA 315, which talks about, you can see the risk assessment procedures. Okay. Now, as per para 6, what is the requirement is that auditor is required to follow some risk assessment procedures, which includes inquiries, analytical procedures, observation, and inspection, to gather the evidence and to gather the understanding of the business and its environment. Now, once that is done, then whatever risk assessment procedure is being performed, whatever information which has been gathered, as per para 10, the engagement partner and other team members are required to discuss the susceptibility of the entity's financial statement to material misstatement. Okay, and the application of the applicable financial reporting framework. Okay, now here what is the scenario is that the engagement team, okay, the engagement team is required to discuss the susceptibility of entity's financial statement to the material misstatement, that how much chances are there that the entity's financial statement, okay, are impacted by the risk of material misstatement, or there could be a risk of material misstatement. Because when I do an understanding of entity, it's not only the one I do as an engagement partner, it's the whole team that performs the task for different areas. And once we gather all the information, we sit together and we discuss. Okay, that is the information we gathered, and according to the whole team, what is the view on the risk of material misstatement? This provides an opportunity for the more experienced team members, including the engagement partner, to share their insights now about the information they have, the knowledge they have of the entity. And the engagement team members also can exchange information about the business risk that they have gathered, okay, during the risk assessment procedures. So this is one of the important area in the risk assessment procedure. Trust me, discussing within the team itself. So let's see the answer. As per SA 315, identifying and assessing the risk of material misstatement through understanding the entity and its environment, the engagement partner and other key engagement team members shall discuss the susceptibility of the entity's financial statement to material misstatement and the application of the applicable financial reporting framework of the entity's facts and circumstances. The engagement partner shall determine which matters are to be communicated to engagement team, which are not involved in these decisions. And that will be possible because, let's say, for example, it is a multi-place audit. It's not the audit only carried out in one place. It's carried out, let's say, with the help of coordination between different audit teams. Or even let's say it's an audit of a very big company with an audit team of, let's say, more than 50 or more than 70. It's not possible to, make all the audit teams sit together and have a discussion. It will be an endless discussion. So that's why, audit partners or engagement partner need to decide some key engagement team members, other engagement team members which are required to be included in the discussion. Plus, if anyone is not able to, is not being part of the discussion, then engagement partner shall determine which matters are required to be communicated to that particular engagement team member, so that he should also be aware about the risk assessment discussions. Okay. Now, what is the benefit of discussions is that it provides an opportunity for more experienced team members, including their engagement partners, to share insight based on their entity's knowledge, allows the engagement team member to exchange information about the business risk, okay, to which the entity is subject to, and how and where the financial statement might be susceptible to the material misstatement due to fraud. Assess the engagement team members to gain better understanding of the potential misstatement of the financial statement in these specific areas, which is like related parties, revenue recognition, management override of controls. Okay. And to understand how the results of the audit procedures that they perform may affect other aspects of the audits, including decisions of the nature, extent of the further audit procedures. Like, for example, I've been given the audit of related parties. When I performed the testing of the related party, I identified, okay, some of the related party investment decisions, or you can say financing decisions of the related party. Let's say I've taken loan from the related party. Okay. Is appears to be, not appropriate, or the terms are not appropriate for the company. In that case, this understanding that how my area of testing will affect the other areas is very important. Provide a basis upon which the engagement team members communicate and share new information throughout the audit may affect the assessment of the risk of material misstatement. Also, not only SA 315 but SA 240 also provides guidance in relation to discussions among the team member about the risk of fraud. It is not always or practical to include all the members in a single discussion. Okay. Hence, again, the engagement partner may discuss with the key members of the engagement team. Okay, including specialist if he considers necessary. The discussion about the risk of fraud. Okay, and the rest of the team members shall be communicated the plan as decided by the engagement partner. So that is with respect to the requirement of SA 315. In the current case, the engagement partner and the manager are not correct by not involving the key engagement team members in the discussing the susceptibility of the entity's financial statement to material misstatement and the application of the applicable financial reporting framework to the entity's fact and circumstances. So that is the answer to this particular question. Any doubts? Any doubts? Okay. If no doubt, let's take some more questions. So, okay. So if I summarize that, if you see in this question, basically, engagement partner did not disclose, the risk assessment procedure with the key engagement team members. As per the requirement of SA 315, engagement partner is required to conduct a discussion with the key engagement team members, okay, about the risk assessment process. Or and why that we discussed just now in the question, that why he is required to do so, because it gives some benefits. Even SA 240 requires you to do that. Okay. Hence, not sharing the information and concluding and communicating to the team that this is a confidential information is not correct. He needs to conduct the team meeting. He needs to make them understand what is the risk assessment procedure performed, what is the information gathered, and accordingly that is required to be done. Okay. So another question is, key engagement team members means, see, key engagement team members. engagement team members which are key to the process, or which are experienced basically, who are leading the engagement, rather than they are into managerial role, or they could be a kind of experienced person on the engagement. There is no specific definition as such to the key engagement team members. It's based on the engagement partner to decide who are the key, who are not. Any doubt? Okay, let me take another question. KPL and company were appointed as a statutory auditor by Ocean Water Limited. Ocean Water Limited was a wholly owned subsidiary of Ocean Waters and Beverages Limited. The appointment of the statutory auditor was performed at the request and suggestion of the parent company. While understanding the entity and performing risk assessment procedures, the audit team decided to obtain understanding of relevant industry, regulatory, and other external factors, including applicable financial reporting framework, the nature of the entity, including its operations, its ownership, governance structure, type of investment that the entity is making, and the way that entity is structured in finance, the measurement and the review of entity's financial performance. However, statutory auditor decided to scope out the understanding of entities' selection and application of accounting policies, including the reason for changes thereto and the objectives and strategies. This was done as the selection and application of accounting policy and objectives and strategies are carried through the parent entity, and reviewing these at the parent entity will be sufficient as per the statutory auditors. So, decided to scope out the entity's selection and application of accounting policies and objectives and strategies. Why? Because these were carried out through parent entity, and they decided that reviewing these at parent entity will be sufficient. So there is no need to review at the subsidiary entity. Okay. Now, kindly guide the audit manager and the partner with respect to the requirement of understanding the entity and its environment, including the entity's internal control, by selecting appropriate option from below. So before we go to the options, number one, that in this scenario, you answer me that, okay, if there are certain things which are managed by the parent entity, what should be the audit procedure, risk assessment procedure the team should follow? If there is something being managed by the parent entity, like here the entity selection and application of accounting policies, objectives and strategies. So scoping out and testing at the parent entity, how that should be done as per SA 315. How that should be done as per SA 315. Come on, guys. What is the requirement of SA 315? I'm giving you the SA name also. What is the requirement of SA 315 with respect to the outscoping the areas which are managed by the parent entity? I'm waiting for the answer. Okay, good, Namrata. So you need to answer what are the requirements for the scoping out of the areas which are performed by the parent entity during the risk assessment procedure. Okay, good, Vikal. Come on, guys. Okay, let us see the options. The auditor shall obtain an understanding of the entity's selection and application of accounting policies, including the reason for changes thereto, and the entity's objectives and strategies, and those related to the business risk that may result in risk of material misstatement. When the auditor is option B, when the auditor is appointed at the request of parent entity, then the auditor shall not obtain an understanding of the entity's selection and application of accounting policies, including reasons for changes thereto and strategies, and those related business risks that may result in risk of material misstatement. Third, the entity conducts its business in the context of the industry, regulatory, and other internal external factors. To respond to these factors, the entity's management or those charged with governance define objectives, which are the overall plans for the entity. Hence, it is responsibility of the management to gather an understanding of the entity's selection and application of accounting policies, including the reasons for changes thereto and strategies and those related business risks that may result in risk of material misstatement. Fourth, business risk is broader than the risk of material misstatement of the financial statement, though it's included in the later. Business risk may arise from change in or complexity. Hence, the auditor should not focus on the entity's selection and application of accounting policies, including the reasons for changes thereto, the entity's objective strategies, and those related business risks that may result in risk of material mistake. So, what is the correct option? A, B, C, D. What is the correct option, guys? Now I think it should be pretty simple to the answer. You need to select one option. Come on, guys, I'm waiting for the answer. So what should be the correct option based on the answers, based on the discussion? Correct, Vikalp? Correct, Namrita? Okay, the correct option should be A. Now I'll tell you the reason why. Number one, when we are performing a risk assessment procedure, although any of the area is being performed by the parent entity, we are not required to scope out that area. Rather, we need to understand that how the parent entity, okay, takes these decisions or decide this thing, decide entity selection and application of accounting policy, decides the entity selection of applicable accounting policies, okay, and objectives and strategies. Now, why? Reason because see, an accounting policy can be specific to company. How parent entity is deciding these accounting policies for its subsidiaries. If they are into the same business line, there could be a group policy. But how the local management or the management, how the management of subsidiary is deciding that those global accounting policies or group accounting policies, okay, that the group accounting policies, those group accounting policies are relevant for subsidiary also. It may happen the parent has a different business structure, business entities, or parent have a different business processes, revenues compared to the subsidiary. So it might not be suitable for subsidiary to directly apply the accounting standards or accounting policies and selection of accounting policies which is done by the parent entity. So a subsidiary, subsidiary management is also required to perform some assessment. Okay, whether these accounting policies are good or not, because they are the responsible for preparation and presentation of financial statement as per the applicable financial reporting framework. They cannot, put their responsibility on someone else's shoulder. Okay, in that case, there is no scoping out. Rather, we need to understand how subsidiary management is taking comfort on these areas. And we need to understand that, okay, how management is deciding, okay, which policy is correct and which policy is not correct. Let's say parent entity is involved, then we need to understand how parent entity sets that thing for the subsidiary. Hence, the correct option is A. We will not be scoping out anything. We will be testing everything. We will be understanding the entity selection and application of accounting policies. See, it's the word entity, not the management. So I need to understand how the entity is selecting or is someone else selecting for the entity? And if someone else is selecting for the entity, then how he is selecting? So the important is how entity is selecting. The second option, which says that auditor shall not, is not correct. C is also not correct. Reason because again it's a, it says it's, we are as an auditor, it's not auditor is not required to do. Same with the D. So the correct option is A. Any doubt? Any doubt, guys? Any doubt? Okay. Now with related to this question only, we were talking about application of like entity selection and application of accounting policies. Number two, objectives and strategies. Now we understood we need to select we need to understand the entity selection of an application of accounting policies, that is there. Okay, we need to understand entity selection and application of accounting policies. Now what are the matters that you will consider while understanding the entity selection and application of accounting policy? So what you will look when you will look into the entities selection and application of accounting policies? Can you give some examples for this area? Then what are the matters you will be looking for? Come on, guys. What are the matters that you will look for when you will try to understand the entity selection and application of accounting policies? Come on, guys. How will you ensure, what areas you will look into when you want to understand entity selection and application of accounting policies? Right? Okay, we know this is an area we are required to do, but what will you do during risk assessment procedures? Correct, Namrata? Absolutely correct. I have only received one answer. Okay, no issues. So, some examples like See, on year-to-year basis, the accounting policy should be consistent. Okay, the application of the accounting policy should be consistent, and if there is any change, we need to understand first what is the change. Whether the accounting policies which are applied in the last year are the same as the current year. Number two, if there is a change, then why there is a change. Number three, what is the method or the accounting policy adopted by the entities for the significant and unusual transactions, because these are the new transactions, significant transactions. Okay, so what they were not present before. So what accounting policies or application of accounting policies had been done for those. Again, the impact of accounting policies on the controversial areas or areas where there is that not no much guidance available. Okay, financial reporting standards, applicable financial reporting framework, regulations, and all those areas are certain areas which I will look when I will think about the entity selection and application of accounting policies. Okay, so I have written few areas over here, the ones which I just discussed now. Now these are the areas which talks about like we discussed just now with respect to the understanding the entity selection and application of accounting policies. Okay, the method the entity is using to account significant unusual transactions. Okay, the effect of significant accounting policy in a controversial or emerging areas. Changes in the entity's accounting policies and financial reporting standards, laws, and regulations that are new to the entity, when and how the entity will adopt such requirements. So these are certain areas that you can look into when you are understanding the application of policies and and selection of accounting policies. Okay. Any doubt, guys? Any doubt? Okay. Let us see one more question. Anand Pal and company were appointed as the statutory audit of Highways and Ways Limited for the financial year 1920. This was the first year of audit attainment for Highways and Ways Limited. Before this, Highways and Ways Limited was audited by Satyapal and Company Chartered Accountants. Highways and Ways Limited, one division was involved in highway projects and another major division was involved in BOT projects, like build, operate and transfer projects. Anand Pal and Company decided that Mr. Surya Pal would be the engagement partner for this audit engagement. Post meeting with the management and those charged with governance regarding the understanding the entity and its operation, Mr. Suryapal decided to identify the risk of material misstatement with respect to the revenue recognition of BOT division. Okay. You are required to guide Mr. Suryapal with respect to the risk assessment procedure for identification of risk of material misstatement in the revenue recognition process. So you need to guide that how Mr. Suryapal can perform the risk assessment procedure for identification of risk of material misstatement in revenue recognition. Or you can provide what Mr. Suryapal can do for the risk assessment procedure. So it will just lay down the basic structure of the risk assessment procedure. You need to lay down the basic structure for the risk assessment procedure here. Come on, guys. Very important question. You need to lay down the basic structure of the entities, how the risk assessment procedure is done. Come on, guys. Correct, Vital. Good, Jamie. Correct, Namrata. Good. Okay. So let us see the answer. So as per 315, okay, like auditor is required to, auditor's responsibility to identify and assess the risk of material misstatement in the financial statement through understanding the entity. Now, with respect to the risk of material misstatement, what auditor is required to do? I told in the summary also. First, I need to understand the risk at the financial statement level. Then I need to understand the risk at the assertion level for the classes of transaction, account balances, disclosures to provide the basis for designing the performing the audit procedure. Okay. And for that, what I'm required to do is I need to identify risk throughout the process of obtaining an understanding of the entity. Okay. Its relevant controls that are related to that risk. It may be related to the classes of transaction, account balances, or disclosure in the financial statement. Assess the identified risk and evaluate whether they are more pervasively to the financial statement as a whole or potentially may affect other assertions. Relate the identified risk to what can go wrong at the assertion level. That is very important. It's not only I identify a particular risk, okay, there is a risk of revenue recognition, but which assertion? Okay, now before I proceed forward, can someone name the assertions? Which are the assertions which could be applicable here? Or for a account balance pertaining to profit and loss account or something like that. For a transaction, let's say for a transaction, what could be the assertions? Which assertions are there for the transaction? For the transaction class, which assertions are there? Come on, guys, quickly. I'm asking which assertions are there for a particular transaction class of, for a particular transaction or transaction class. No, Janvi, no, that's an account, not the assertions. Good, Namrata. One is missing. I'll say one more is there. Come on, guys. Correct, Namrata. There are few more Vikalp. Which are the assertions for a particular transaction class? We are discussing assertions over here. Which are those assertions? Guys, that's something, I expect that you should know, because we are discussing the risk assessment procedures. Without knowing the assertions, you cannot perform a risk assessment. Trust me. That is a basic thing. I'm expecting the answers. Correct, Vikalp? So I have only received correct answers from Namrata, Vikalp. I'm still awaiting other answers. Correct, Janvi, but still two are missing. Okay, so let me show you the assertions. These are the assertions for the transaction class. Occurrence, accuracy, cutoff, classification, completeness. Same way, for balance assertion, account balances, the occurrence will change to existence. Accuracy will change to valuation. Cutoff will remain same. Completeness will remain, okay, and rights and obligations. For presentation and disclosure occurrence, we have occurrence and rights and obligation, completeness, classification, and accuracy. So these are certain assertions for transaction, balance, or presentation and disclosure. So in the current case, when I was discussing that, relate the identified risk to what can go wrong at the assertion level, I'm talking about these assertions. Okay, taking account of relevant controls that the auditor intend to test. Consider the likelihood of the misstatement, including possibility of the multiple misstatements and magnitude that could result in a material misstatement. So I need to think about the likelihood and magnitude. And accordingly, in the current case, Mr. Suryapal wants to perform a risk assessment procedure with respect to identification of risk of material misstatement and revenue recognition. For that, he should identify the risk in revenue recognition process by obtaining an understanding of the entity and its environment, including relevant controls. Also, he should assess the identified risk and relate the identified risk to what could go wrong at the assertion level by taking account of the relevant controls. And he needs to understand, likelihood and magnitude of the misstatement. Clear? So this is how you can perform a risk assessment procedure for any area. Any doubt? Any doubt? Okay. Let's see some more questions on SA 300 series, which includes 330 and other 320, 402, 450. While designing the response to the address, designing the response to the to address the assessed risk of material misstatement in existence and completeness of the inventory. So, material misstatement with related to existence and completeness of the inventory. The audit team decided to perform test count on sample basis. For the same, while attending the physical count, the audit team decided to perform test count by tracing the item selected from management count records to the physical inventory and tracing the item selected from physical inventory to the management count records. Also, the audit team asked management to provide copies of management completed physical inventory count, which will assist them in performing subsequent procedures required to determine whether the inventory records actually accurately reflect the actual inventory results. Okay. However, when management contended that the auditor is allowed to attend physical count, but they are not allowed to perform any other procedure during the physical count. Okay. However, management agreed to share the copies of the management completed physical inventory count. When inquired from the management regarding the denial to the auditor for performing the additional procedures along with attending the inventory count, the management explained that the inventory consists of very unstable chemicals and inflammable gases, which requires handling with skill and care. Any carelessness in the handling the inventory can result in catastrophe. As a result, due to safety standards and policies, management cannot allow auditor to perform additional procedures. Kindly guide the audit team in the current scenario. So, number one, they wanted to perform inventory procedures. Management denied regarding the performing the additional audit procedures. Okay, reason because inventory consists of unstable chemicals and inflammable gases. Any carelessness in handling in the inventory can result in a catastrophe, and accordingly, management cannot allow. However, management agreed to share. Okay, agreed to share the copies of management completed physical inventory count. So you need to guide the audit team in the current scenario. What audit team should do? Because they identified that there is a assessed risk of material misstatement in existence and completeness of the inventory. And they need to perform test count on sample basis. So what you are required to do here? Number one, you need to answer that the impact of management denial to perform on the audit procedure to obtain sufficient and appropriate audit evidence regarding existence and the completeness of the inventory. So what is the impact of the management denial? Okay, to obtain sufficient and appropriate audit evidence regarding existence of the inventory. How auditor can obtain a sufficient and appropriate audit evidence? How auditor can obtain appropriate and sufficient audit evidence in the current scenario? Come on, guys. So there are two essays into this particular answer. Okay. Now, what should be the auditor's approach here if they are not able to perform sufficient and appropriate audit evidence regarding the existence and completeness of the inventory? What they should do? What they should do? Come on, guys, I'm waiting for your answer. So what should auditor do in the current scenario? Okay, good Janvi, good Vikal, correct Namrata, good Vikal. Okay, see, good. So now with respect to uh, number one, that what auditors should do when they are not able to obtain sufficient and appropriate audit evidence. So there are two things. One, SA 501, which comes into the picture, which talks about audit evidences, specific consideration for the selected items. Okay, and second is SA 330 that talks about the auditor's response to the assessed risk. Now, SA 501 talks about performing alternate procedure. When inventory is material, then what is required to be done? Auditor is required to obtain the audit evidence regarding the uh, existence and condition of the inventory by performing the attending the physical inventory count unless it is not practical to do so. Second, perform audit procedures over the entities final inventory records to determine whether they accurately reflect the actual inventory count results. Okay, so these are the two steps they are required to do. Now, here they are not able to perform test counts. Okay, this is the when we are attending a physical count, one of the requirement is to perform the test count, which they are not required to do. They are not able to do because of the nature of the inventory. Now, what they should do is, in that case, if they are not able to obtain sufficient and appropriate audit evidence, okay, then they shall attempt to obtain further audit evidence through any other audit procedures. If still the auditor is unable to obtain sufficient and appropriate audit evidence, then the auditor shall express a qualified opinion or a disclaimer of opinion. Now, here in the current case, they are not able to perform test count. Okay. Then the audit team should perform additional audit procedures to gather further audit evidence. If they are still not able to gather further audit evidence, then they need to consider, okay, what is the impact of that particular, missing audit evidence on my opinion, and accordingly they either need to qualify their opinion or issue a disclaimer of opinion. Clear? Any doubt? Okay. Let's make a bit interesting this particular question. Okay. By including the concept of materiality in this. By including the concept of materiality in this, let's make a bit of bit of interesting. Now, let's say for example, inventory balance as on 31/3/23 was rupees 7.5 crores. Okay. Inventory balance as on 31/3/2023 was 7.5 crores. Now, the overall materiality for a financial statement line item, overall materiality for the financial statement as a whole. Okay, for the financial statement as a whole is, let's say for example, rupees 3 crores. Performance materiality for the financial statement. Okay, performance materiality for the financial statement, let's say, is rupees. Let me revise this one then. Okay. Let's say overall materiality is my 20 crores and performance materiality is 1 crore. Okay. Performance materiality is 1 crore, but overall materiality is 20 crores. Now, the inventory balance was 7.5 CR and I was not able to obtain any audit evidence, additional audit evidence. No additional audit evidence was obtained. Okay. No additional audit evidence was obtained in the current scenario. Now, you are required to tell me based on the materiality levels, what impact it could, provide on my opinion. What impact it could given on my opinion. Come on, guys. What impact it could, give, it could be on my opinion based on these numbers. Let's say. Come on, guys. For the performance materiality, quickly you can refer essay 320. Come on, guys. What could be the impact on my audit opinion here if these are the materiality levels plus the inventory balance? Come on, guys, I'm waiting for your answer. For performance materiality, the concept of overall materiality, they both are, discussed in essay 320 in detail. I'll suggest kindly refer for that essay. Correct, Janvi? Absolutely correct. Okay. Now, as I am getting a lot of questions on the materiality things, first tell me why performance materiality is required. Okay. Can anyone tell me why performance materiality is required? What is the role of performance materiality? Okay. So, see now, what is the scenario is, so I'm getting a lot of questions on the performance materiality. I request everyone, please, before start of the lecture itself, refer to the lectures of, these standards so that, you can at least, have the understanding of the topic, the concepts over here. But anyways, let me explain you the concept of the performance materiality. Okay. Now, what is performance materiality? So there are two things. One is the overall materiality, that the materiality that is established in the financial statement as a whole. Okay. So when I talk about overall materiality, overall. So this is materiality for the financial statement as a whole. Now, if I decide a materiality which is financial statement as a whole, okay, so there might be chances that like there might be some scenarios that some of the items which could escape the materiality level. So, for example, when I'm planning to detect the individual small items, let's say for example there are issues of my for a hypothetical example, okay, let's say my overall materiality is rupees 100, overall materiality is rupees 100. Now when I will check in a particular, and this is at the financial statement level whole. Now when I'll perform the testing, I'll perform the testing at the individual area wise, let's say account balances, data, sales, expenses, whatever, individual area wise. Now, on those individual areas, let's say, for example, in sales, I got a misstatement, okay, of rupees 5. In purchases, I got misstatement of rupees 3. Okay. Then you can say in, let's say, expenses, I got a misstatement of rupees, let's say, 7. Now, these 537 are less compared to my overall materiality, are smaller compared to my overall materiality. So I may choose to ignore them. Okay, I may choose to ignore them because these are smaller, not material compared to my overall materiality as a financial statement. What if the individual, okay, misstatement together reaches to a level that yes, it becomes material compared to my overall materiality. In individual level, I may choose to ignore them because expense 7 not matter, does not matter for my overall materiality level. Sales, it's not impacting compared to my overall materiality level. But when I combine all misstatement together, it may become material. Now, so just to identify that, okay, to identify the impact of the individual material items, which I'm considering as of now immaterial. But later on, if I want to consider, I want to consider their impact, if I want to understand their impact, I create a performance materiality. I create a performance materiality to a reduced low level. So, okay, to a reduced low level, that I have a, I have a probability that aggregated, uncorrected, undetected misstatement in the financial statement, okay, I am able to analyze those uncorrected and undetected misstatement in the financial statement level for in compared to the overall materiality level. So for example, let's say I decided the, let's say 5% is the performance materiality of overall materiality. So it will be rupees 5. Okay, it will be rupees 5. Now I will compare these 5, 7, 3 with this 5. Or let's say I consider 25%. So it will be 25. So now I will consider this 25 rupees with together of 7, 5 and 3. And when at the moment it will crosses 25 in total, then I will say that okay, the uncorrected misstatement are material. So performance materiality is set to reduce to an appropriately low level that the probability that the aggregated of uncorrected, undetected misstatements, okay, exceeds the materiality for the financial statement as a whole are identified basically. I hope I'm clear. Now here the performance materiality of was of 1 CR. The inventory balance is of 7.5 CR. If I'm not able to get additional audit evidence for the inventory, means I have a misstatement. I can say, okay, I'm not able to get the audit evidence. This is material. This is material. And hence, if this is material, okay, accordingly, my opinion will get impacted. However, this is not material with respect to whole as a financial statement. So it's not, impacting the whole financial statement. But yeah, it is more than my performance materiality. So means it's material. If it would have been more than my overall materiality, means my whole financial statement are misstated. So I could issue an adverse opinion. But as of now, I have an option to issue a I have an option to issue a qualified opinion. Clear? Any doubt? So basically, performance materiality aims to reduce the impact of materiality. I use a lower threshold than a materiality as a whole on the financial statement level. Okay. So that I can understand the impact of smaller errors or misstatement when they are combined together. So when they are combined together, I can understand okay, what could be the impact of these misstatement together. That is the performance materiality concept over here. Okay. Okay. Now, let's take a quick break for 10 minutes and then we can gather back and continue the questions. Let's take a quick 10-minute break. Hello everyone. Welcome back to session. Okay. So till now we were discussing about the materiality. We discussed about risk assessments. We discussed about response to the assess based. Now let us see some more questions on these areas. Okay. So the question is, Mr. Manan, a new joiner in the audit team as an audit executive, was entrusted with the task of gathering understanding of the entity in which the company was operating. However, Mr. Manan was not sure where to start and what to look for. Kindly guide Mr. Manan with respect to the obtaining understanding for the relevant industry of the entity along with its environment, including the entity's internal control at the start of the audit. So, if you are interested with the task that, okay, go and understand the entity's industry in which it is operating, what you will look for. So, the thing is that entity's industry here, gathering an understanding of the industry in which the entity, in which the company was operating. So you need to understand, you need to provide that, okay, what you will do when you are interested with the task to understand the entity's industry. What you will check. Correct, Tushar? What you will check if you are required to understand the industry in which the entity, the company is operating. Come on, guys. Correct, Janvi? Correct, Namrata? Come on, guys. Some few examples more that, okay, what you will understand when you want to understand the industry in which the entity is operating. Take an example in your head, like, let's say pharma, let's say insurance, let's say NBFC, power sector. So, what are the things that you will look for? Let's say automobiles, rubber manufacturing. What factors you will look for in industry? Very important. See, this is something we are putting into a practical way. So if you tomorrow go on audit, you want to understand, okay, entity, its environment, what we study over here, how will you understand? That is the thing you need to answer, like, okay, what practically you will do to understand entities industry, that, okay, in which industry entity is operating, how will you gather the understanding of that industry? It's not only that, I will check laws and regulations. See, one of the answer is laws and regulations that is applicable to that industry. But that is only one of the answers. There are many things that you need to look for other than laws and regulations. What are those other areas other than the laws and regulations? So I have received the answer of only laws and regulations. That is a one part. That is a one area for that industry. Okay. But Namrata, what you will look for when you are referring the annual reports of similar companies in the industry? What you will look for? Okay, referring the annual report, okay, that's a way to gather the information or understanding. But what areas you will be looking in the annual report to gather the understanding? Again, requirement of certification will go to types of laws and regulations. Any other answer other than the laws and regulations? Any other answer, guys? Understanding the corporate structure, it's within the entity, not the industry. So if I want to understand the corporate structure, it's something, understanding the entity of itself. I'm talking about the industry in which the entity is operating. Good, Janvi. Again, KMP ownership is something, within the entity, not related to the industry. Come on, guys. Like, okay, I want to understand. Let's say, for example, let's take some example. Uh, let's say agriculture. What you will do to understand the industry? Okay, I have a company which produces agriculture products. Let's say fertilizers. Now I want you to understand the entity in which the entity is understanding the industry in which the entity is operating. You know it's a fertilizer industry, but what you will understand, what is the information that you will gather from that, how it will help you. Till the time you do not identify which information you need with respect to the industry, only fertilizers will not help you in gaining the understanding of the will help you in the risk assessment procedure. I know my industry, my company is working in the fertilizer industry, but what is the help in my risk assessment procedure? So what information you will be looking other than the name of the industry or laws and regulations that will help you in the risk assessment procedure? Okay, so that is a very important part because we know the names, but we do not know the information required. I know I need to understand the entity. I know I need to understand the industry. I know I need to understand the laws and regulations, but what within them? It's very important. Come on, guys, give a try at least. I hope everyone will be recharged now. We took just now a break. Okay, let us see. So when I'm looking for the industry, it's not only the laws and regulations. It's not only one particular area, the name of the industry. Let's say, for example, fertilizers. Okay. Now, if a company which I'm auditing is involved into the manufacturing of fertilizers, what is the thing first I will understand? Number one, who are the suppliers in the market? Okay, from where I get the material. Who is the supplier for that particular industry? Whether it's a monopoly for the suppliers, the type of supplier market, whether it's a competitive market, oligopoly, duopoly, what is the structure for the suppliers? Same way for the customers. What is the structure for the customers? And when I talk about the industry, the bigger term, okay, who are the customers in the industry itself? Who are the customers for the industry? Is there only one industry? Okay, like whatever fertilizers we need to manufacture, we need to sell to only one government company, or I cater to a government company which is there in the market. It's a monopoly from the customer side, competitive market. Number two, who drives the price for a particular product? It is whether it is regulated by the laws and regulations, or it is something dependent upon the one market demand supply factors. Number three, technological developments that are happening in the industry. Okay. Now, let's say, for example, fertilizers. So earlier till now, there were, urea-based fertilizers. So let's say, for example, tomorrow a technological development is happening. The urea-based fertilizers are no longer, considered good for the, for the crops. Okay. So now they are coming with the organic acids or organic fertilizers, where they mix nitrogen or something like that. A new technology is coming into the market, which is eco-friendly. Next generation fertilizer, sort of like that. Okay. So what is the new technology in the market itself? Then the competition. What is the competition in the market? Who are my competitors? Basically, the big competitors. What is their demand? What is their capacity? What is their price comparison compared to my products? Whether I'm selling at a cheaper rate, whether my quality is good compared to them. So a competition comparison, sort of. Okay, market competition comparison. Then whether it's a seasonal business or cyclical business. For example, the demand of fertilizer shoots up in the month of March, April, May, and goes down in the month of, let's say, which are not the crop seasons. So in crop season, the demand of fertilizer increases, but in the non-crop seasons, the demand of fertilizer decreases. So what is this, demand cycle? Cyclical, seasonal, continuous. What is the cycle of that particular industry? What is the cycle for conversion of the amount? Cash back, cash flow cycle, basically. What is the usual credit days within the industry? What is the usual credit that I provide and I get in the industry? Energy dependency. Now, the new field with respect to the industry comes the ESG. Okay, the dependency on the environment, sustainability, and society governance. How it is impacting my society. What I'm giving back to the society. What is the industry overall with respect to the ESG line? Let's say oil and gas. They are not considered good onto the ESG. They are not environment friendly until and unless it's a green energy. So accordingly, I need to understand what is the industry here, like in which industry I'm working on. Like these are the factors I need to consider. Then only I will be able to identify. Okay, good. Let's say, for example, ESG. And a lot of companies which were not environmental friendly, or they were not having a good ESG score. Okay, or they were carbon emitting businesses. A lot of companies stopped investing in them. Literally stopped investing in them because they were not focusing on the carbon emission. Rather, they were not ESG friendly companies. So again, this is something which is very important, because if I'm not getting the funds, there's a risk that if I'm dependent upon the funds from outside, if I require funds, I'm not good at the cash flow as of now, then there's a risk. Again, seasonal and cyclical seasonal activities. If my business is performing in the seasons, I have a risk that what if I do not perform good in the seasons when there's the market? Competition. Let's say, for example, the product which is sold by the competitor is good quality at the lower price compared to my product. What steps the company is doing to meet the competition? I'm not able to cater the demand. What is the demand in the market? My market share is only 5%. Okay, and it's declining. So it's not only the point in time I need to consider the industry, but it's the trend also. What was my market share? What is the market share now? Is it declining? If it is declining, then why it is declining? What is the reason behind the decline? Is it a risk for me? So like this way, I need to understand the whole industry. Let us see the answers quickly. So when I talk about industry, as I told you, competitive environment, supplier and customer relationships, technological developments, okay, which may include my market and competition, including demand, capacity, and price competition, cyclical and seasonal activities, product technology relating to the entity's product, and energy and supply costs are certain areas where about which I need to gather the information to perform the risk assessment procedures. So these are the informations I need to gather. Clear? Type of investment, entities, financial performance is something related to the entity, it's not related to the industry. Any doubt, guys? I hope you understand like what information you need to gather when you are referring to the industry in which the company is operating. Any doubts, guys? Any doubt? Okay. If no further doubts, then the next question over here is a case study sort of, which is not only limited to SA 315, which covers a lot of things again. So please, when we are discussing the question, try to concentrate on the whole case study. Okay, and accordingly you need to answer this question. So based on this, we have a lot of questions below based on this case study. Okay, and case scenario. So let's see the case scenario first, and then we'll jump to the question. So first we'll try to understand only the case scenario. Then we'll jump to the questions. Mr. Kannan, in charge of auditing the accounting estimate in the audit team. Okay, so he's the in charge of auditing the accounting estimates. Inquired with the management of the Durable Consumer Goods Limited, a listed entity, about the basis for revising the warranty provision calculations retrospectively in the current financial year 22-23. So they revised the warranty provision calculations. So revising the warranty provision calculation retrospectively in the current financial year. Now, as per management, they assessed that the warranty claims for the last 10 years and compared them with the sales for that period. They identified that the basis or ratio used earlier to book warranty provision against every sale was inappropriate and less than the actual warranty claims booked in that period. So they reassessed based on the data for the last 10 years and they compared with the sale. And they identified that the basis and the ratio used earlier was inappropriate, okay, to book the warranty claims for that period. Fine. Earlier, the management booked the warranty provision at 3% of the product sale value. However, based on the revised re-estimation, management retrospectively increased the provision by 2% since FY 2021. This resulted in additional warranty provision impact of 25 lakhs in the current financial year and rupees 20 lakhs each in the previous 2 financial years. So again, so warranty provision earlier, the warranty provision was booked at 3%, which was increased by 2% since FY 2021. And the provision, warranty provision impact or additional, you can say impact was 25 lakh in the current financial year and 20 lakhs in the each previous 2 financial years. Accordingly, management restated the liability in the balance sheet as on 31/3/2023. An adjustment was made to the retained earnings for the amount pertaining to prior periods. Also, the following disclosure was made in the financial statement under the notes to financial statement. This is a note from the financial statement with respect to the disclosure. Note 22, warranty provision re-estimation. During the year, the management hired push consultants who identified that the provision created at the 3% of the product sale value was not appropriate and less compared to the actual warranty claims received by the company. For this, the company, with the help of push consultants, has analyzed the data from the last 10 years and has reinstated the warranty provision of previous 3 years. Accordingly, the necessary impacts are provided in the financial statement to reflect the same. This is the disclosure which is given. So I could understand, okay, they hired push consultant who identified warranty provision, who identified that the warranty provision was not appropriate. Okay. So they hired a push consultant. Fine. Now, Mr. Kannan, who is Mr. Kannan? The person who was in charge of auditing the accounting estimate. Okay, he is the in charge for auditing the accounting estimate in the audit team. Mr. Kannan inquired with the management to understand the re-estimation process and provide a basis for identifying and assessing the risk of material misstatement for accounting estimates. During the inquiry, Mr. Kannan identified the management has hired push consultant who look after all the estimates required in the financial statement. As per management, push consultants were expert in the fields of estimate. Hence, Mr. Kannan should review directly working papers of push consultant instead of performing other procedures. So what management told them is, they have hired this consultant. They look after all the estimates required in the financial statement. And hence, Mr. Kannan should review directly the working papers of these consultants instead of performing other procedures. Subsequently, Mr. Kannan concluded that there is no need to perform further risk assessment procedures as push consultant handled everything and there is no high risk of material misstatement in the re-estimation process. Mr. Kannan decided to inspect the working papers for the re-estimation calculation and for the disclosures of the impact of the warranty provision prepared by the push consultant. Okay, so Mr. Kannan decided that okay, no need to perform any further risk assessment procedures. Okay, there is no risk of high material misstatement in the re-estimation process. And Mr. Kannan decided to inspect the working papers of re-estimation calculation. So while reviewing the working papers, Mr. Kannan reviewed the following areas. Which are the following areas? Whether the methodology adopted is reasonable, whether the data used is accurate, whether the assumptions used by the expert are in line with the other assumptions adopted in the re-estimation. So these are certain areas that Mr. Kannan looked into. Okay. After reviewing the working papers, Mr. Kannan did not identify any observation, and accordingly, he concluded that the re-estimation is as per the applicable financial reporting framework. So no observations. And re-estimations are as per the applicable financial reporting framework. Later, this audit file was selected for the QRB, quality review by the QRB. After reviewing all the working papers, technical reviewers submitted a preliminary report that the statutory auditor has not ensured the compliance with applicable technical standards in India and other applicable professional and ethical standards and other relevant guidelines with respect to the re-estimation. Based on the findings, the quality review board forwarded the case of non-compliance to the disciplinary directorate for its examination, where Mr. Kannan was held guilty of professional misconduct. Okay, again. So the audit file was selected for the QRB, and in the preliminary report, it was held that statutory auditor has not ensured compliance with the applicable technical standards with respect to re-estimation, and disciplinary directorate held Mr. Kannan guilty of professional misconduct. Now this is whole case scenario. I know it is big. So there are few steps here. Number one, Mr. Kannan was in charge. Earlier, the warranty was booked at 3%. The company restated the warranty by increasing 2% retrospectively with the impact of 25 lakhs in the current year and 20 lakhs each in 2 financial years. Mr. Kannan, to validate the re-estimation, inquired with the management that who performs the re-estimation, and they got an answer that they should contact with push consultant because they look after all the re-estimates. They can review their working papers, okay, instead of performing any inquiries or any understanding. So Mr. Kannan decided, okay, let's go for the working papers, and he reviewed the working papers where he checked whether the methodology adopted in the re-estimation is correct or reasonable, whether the data used is accurate, and whether the assumptions used by the expert are in line with the other assumptions. Mr. Kannan did not identify any observations, and he concluded that the re-estimation is as per the applicable financial reporting framework. This audit file was selected for the QRB. A preliminary report was submitted, wherein it was held that the auditor has not ensured compliance with the applicable technical standards with respect to the re-estimation. Disciplinary director held that Mr. Kannan was held guilty of professional misconduct. Now, question number one. As per the disciplinary directive, Mr. Kannan should be held guilty of professional misconduct with respect to the inappropriate auditing of warranty re-estimation. However, Mr. Kannan had a different opinion and he was not guilty as he performed the audit as per the required standards on auditing. Kindly comment on the scenario by selecting an appropriate option from below. Before I proceed to the questions, I want you guys to answer whether he is guilty of professional misconduct or not. If yes, then why? Whether he is guilty of professional misconduct or not. If yes, then why? That's a very important part. Yes, then why? No. If it is no, then it is fine. If yes, then why? That is very important. Tushar, I think your comment is not pretty much clear. Can you rewrite your the reason for your answer? Come on, guys. Take your time. Understand the case study in detail. Okay, understand it in detail. But you tell me then why, if he's guilty of professional misconduct, then why? If not, then why not? So he reviewed the working papers of the consultant where he verified the methodology adopted is reasonable in the circumstances, whether the data used is accurate, whether the assumption used by the expert are in line with the other assumptions adopted in the re-estimation. So Mr. Kannan verified these areas when he reviewed the working papers. So he reviewed the working papers. In order to check whether the work performed by the consultant is correct or not. Good, Tushar. Come on, guys. No, Janvi, we will not consider consultant as a self-service organization. Come on, guys. I want to understand from your side whether he is guilty or not. Okay, fine. Let us go other way around. Instead of identifying whether he is guilty or not, let's go one by one. Okay, number one. I'll skip the question number 9. I'll take it at the later stage. Okay. So, before we go to question number 9, let's understand few more questions, or we go step by step with respect to this question. Okay. Now, first of all, you need to provide, okay, what are the things that Mr. Kannan is required to understand. Okay, Mr. Kannan is required to understand with respect to the applicable financial reporting framework requirements. So let's say, for example, in this question, now there was a requirement of re-estimation. Okay, so to understand what is the requirement of applicable financial reporting framework with respect to this particular transaction, what steps you will take, what you will look for, okay, to understand the requirements of applicable financial reporting framework here. So, what steps are required? Basically, let's say, for example, question 10. As per technical reviewer, Mr. Kannan failed to understand the applicable financial reporting framework requirement relevant to accounting estimates, including related disclosure. Kindly guide Mr. Kannan with examples of the matter that must be determined to understand the applicable financial reporting framework requirements relevant to accounting estimates, including related disclosures. So, what are the matters that are first required to be determined in order to understand the applicable financial reporting framework for a particular class of transaction? Come on, guys. Correct, Tushar. Now, if I want to understand the requirement of the applicable financial reporting framework with respect to the estimates, what matters I need to first determine to understand what are the requirements of applicable financial reporting framework. Or let's say, how will I understand? Okay, what is the requirement for applicable financial reporting framework? In this case, what will be the applicable financial reporting framework in this scenario? So the company is My Durable Consumer Goods Limited. Okay. What is my applicable financial reporting framework in this scenario? Correct, Namrata. Correct, Janvi. So in this scenario, what will be the applicable financial reporting framework? It's a manufacturing company. That's why they have a warranty. Okay, Jagmeet, that's a partial answer, but good. What is my applicable financial reporting framework requirement for this particular entity? I'll highlight the entity. Come on, guys. It's pretty simple. This is the entity I'm talking about. Durable Consumer Goods Limited, a listed entity, manufacturing entity. What is the applicable financial reporting framework for this? So the applicable financial reporting framework for this entity will be Schedule 3 plus NDS plus SEBI requirements, if any. Okay. This is the basic applicable financial reporting framework I could see that will be applicable to this entity, majorly Schedule 3 and NDS. Okay. Good. Now, let's say this is the applicable financial reporting framework requirement. So when I want to understand the applicable financial reporting framework, I need to understand few matters. First, conditions for the recognition and method for measurement of accounting estimates. Like, what are the conditions that require us to, recognition for the accounting estimates? Each and every financial reporting framework provides some conditions for the recognition and measurement of accounting estimates, method, how to measure the accounting estimates, specific certain conditions that permit or require measurement at fair value. Okay, with respect to the accounting estimate. Okay, these are the certain conditions which require us to measure the a particular estimate at the fair value. Third, specific required or permitted disclosure that are there under the applicable financial reporting framework. So these are the few matters that we need to determine in order to understand the requirement of the applicable financial reporting framework. So if I want to understand what is the requirement of the applicable financial reporting framework with respect to estimates, I need to understand recognition criteria, measurement criteria, specific requirements, disclosure requirements. Okay, these are the four things I need to understand: recognition, measurements, specific certain conditions, permitted disclosures. Unless and until I have not understood these four things, how can I understand what is the requirement of applicable financial reporting framework? Okay. Now, so that is something I understood. Okay, this is a requirement of applicable financial reporting framework. Now, in this case, okay. So, Mr. Kannan understood the requirement of applicable financial reporting framework. So, you tell me, okay, when you want to perform the risk assessment procedure, you understand the applicable financial reporting framework, you understand what is the requirement of that financial reporting framework, and accordingly, a risk assessment is performed. Okay, and accordingly, a risk assessment is performed. Now, here, while understanding, you identified that, okay, it is, there is a management expert hired by the management for performing a particular task, for performing a particular task. What are the areas or things you will look with respect to this? Like, okay, there is a particular consultant who is looking after the estimates. When you will perform risk assessment, what will be the areas or what will be the procedures you will perform, okay, to understand or to understand the risk of material misstatement in this area. So at the time of understanding the entity and at the time of performing the risk assessment procedure, okay, as an auditor, what I'm required to look for? With respect to the re-estimates, what you will look for? Correct, good. Come on, guys. What are the areas I will look for when I'm performing the risk assessment with related to the re-estimates or where the management expert has been hired? So when a management expert has been hired and I need to perform the risk assessment, there are certain things that I will be looking for. For example, nature and complexity of the matter to which the management expert relates to, risk of material misstatement, availability of the alternate source of audit evidence, nature, scope, and objective of the management expert, whether the management expert is employed by the entity or not, or say, independent management expert, the extent to which management exercises control or influence over the work of management expert, whether the management expert is subject to technical performance standard, the nature and extent of the any control within the entity over the management expert, knowledge of management expert, or auditor's experience and knowledge about the field of management expert, and my auditor's previous experience of the work with that expert. So these are the matters which impact my nature, timing, and extent of audit procedures that I need to consider at the time of risk assessment, okay, or designing my audit procedures with respect to the management expert. So just a minute. Sorry, I think there's a technical glitch. There is some technical glitch. Just a minute. Okay. So basically, I was talking about management expert. Okay. So I was talking about what are the things that I need to consider when I'm considering the role of management expert over here. So when I'm considering the role of management expert, when I'm performing the risk assessment procedures, I need to consider few things, and these are the few things which I need to consider when I'm referring to the management expert. So as I told you, uh, the areas that are there for the management expert is like, I will understand the work, I will understand the nature of an extent of the controls over the management expert. Okay, I will understand basically the availability of the alternate audit source, the nature, timing, and extent and objectives of the management expert work, whether the management expert is employed by the entity, the extent to which the management expert can exercise the control over and influence over the work of management. So these are certain areas that I need to understand when I'm performing the risk assessment procedure. Otherwise, I won't be able to understand, okay, what is the role of management expert and what are the requirements or information that I need to gather before I plan, before I decide my nature, timing, and extent of audit procedures. Clear? Any doubt? So this is a requirement. Okay, now tell me where this requirement is and as per which essay this is required. As per which essay this is required? So when I talk about management expert, it is essay 500. Okay, that requires us to understand the work performed by management expert before taking that as an evidence, audit evidence. Okay, plus essay 540. Essay, no, not essay 620, plus essay 330. When I draft a response to assessed risk. Okay. So these are the areas that I need to understand before I perform my risk assessment or while I'm doing my risk assessment procedures. Okay. Now, coming to the question. As per the technical reviewer, performing risk assessment procedure and related activities, Mr. Kannan should have reviewed the outcome of the accounting estimate included in the prior period financial statement. However, as per Mr. Kannan, he reviewed the working papers of Kush consultant during the substantive procedures, and that is sufficient as per SA 315. So, technical reviewer was saying that while performing the risk assessment procedure and related activities, Mr. Kannan should have reviewed the outcome of the accounting estimate included in the prior period financial statement. Now, Mr. Kannan said that he reviewed the working papers of Kush consultant during substantive procedures, and that is sufficient as per SA 315. Now, you need to guide what Mr. Kannan with the correct option by selecting the correct option. And what are the options? When performing a risk assessment procedure and related activities to obtain an understanding of the entity and its environment, including entity's internal control, as required by SA 315, the auditor shall test during substantive procedure the outcome of the accounting estimate included in the prior period financial statement, or where the applicable their subsequent re-estimation for the purpose of current period. While performing the risk assessment procedures and related activities, as per SA 315, The auditor shall review the outcome of accounting estimated included in the prior period financial statement, or where applicable, their subsequent re-estimation for the purpose of current period. Option C. As the auditor is not intended to call into question the judgment made in the prior periods, based on the information available at that time, the auditor shall not review the outcome of re-estimation at the time of risk assessment related activities. Option 4. In identifying and assessing the risk of material misstatement, okay, the auditor shall evaluate the degree of estimation uncertainty associated with accounting estimates by performing outcome testing of previous re-estimates during the substantive procedure. So these are the 4 options. Whether Mr. Kannan is required to look into the outcome of the previous year estimates or not. If yes, when? If not, then why not? The options are that. You need to select one option with respect to this. So you need to select one option from this. Whether Mr. Kannan is required to review the outcome of the previous year estimates, or he's not. Okay, Tushar. Come on, guys. What should be the correct option here? Okay, Tushar. What is the correct option in this case? A, B, C, D. So with respect to the auditing the accounting estimates, as per the technical reviewer, Mr. Kannan should have reviewed the outcome of the previous accounting estimates. However, Mr. Kannan is of the view that he has reviewed the working paper. He is not required to perform any other procedure. You need to select one option which guides the Mr. Kannan with respect to the correct way of looking for the accounting estimate, auditing for the accounting estimates with respect to reviewing the previous year with respect to the outcome of previous year accounting estimates. Okay. Good, Namrata. Come on, guys. I'm waiting for the answer. Come on, guys. You need to select one option. I received a few answers. I'm still waiting for further answers. Okay. So the correct option over here, let's understand first. So technical reviewer was saying that Mr. Karan should have reviewed the outcome of the accounting estimate included in the prior period financial statement. Okay. Reviewing the outcome of accounting estimate which are included in the prior period financial statement. Now, whether it is required to be done. So as per SA 315, it is required to be done. Okay. We should review the outcome. Plus SA 540 talks about, okay, with respect to the accounting estimates, the risk assessment procedures that are required to be performed as per SA 315. So if you refer to SA 540 plus SA 315, it says that we are first required to understand the requirement of applicable financial reporting framework, understand applicable financial reporting framework with respect to accounting estimate. Number two, how management identifies need for this. Number three, when there is a accounting estimates, okay, how management makes the accounting estimates. Then at that particular point in time, we need to understand data, method, okay, controls, okay. If expert, then expert. If we are using expert, then refer to SA 500. Then whether there has been change in the methodology which is there in the current case. Then estimation uncertainty. Okay. Plus, we are required to review the outcome, of accounting estimates of prior periods. Okay. Accounting estimates of prior period. Okay. And their subsequent re-estimation, if there is. Now, why? Because the nature and extent of the, the audit procedures that we need to perform over the accounting estimates, okay, that requires some information about the methodology and the accuracy of the management's accounting estimate. So the review of the outcome will give us an idea, okay, how accurate and how appropriate is the data, model, method, whatever management is using to make the accounting estimate. However, the review is not intended to call questions on the judgment made in the prior periods. If there is a judgment made in the prior periods based on the data available at that particular point in time, that should be fine. Okay. I cannot consider the data which was not available then but available now, and I can say, okay, the management has not made an estimate appropriately. That is incorrect. So when I'm performing the risk assessment, when I'm understanding the accounting estimate, and when I'm reviewing the prior period, I need to consider data that was available at that particular point in time. I cannot use the data which is available now, and I can, in order to, validate whether the estimate made was correct or not. So that is the difference. Okay. So SA 315 requires us to review the outcome during the risk assessment procedure, because SA 315 talks about the risk assessment procedure. But if you see the option number 1, it talks about SA 315, the auditor shall test during substantive procedures the outcome of accounting estimate. That is wrong. When I will be testing, there are different methods that I will be using for substantive testing, re-performance, recalculations. Okay. But when I'm performing the risk assessment, I need to review the outcome to draft a response of the substantive procedures that I need to perform on the re-estimates. So understanding the outcome is a part of the risk assessment, not the substantive one. Hence, A is incorrect, B is correct. C is incorrect because I need to review. C is saying that do not review. And D again is not correct because I need to review. So B is correct option. Okay. Now, very good question. How we can differentiate the data available now and earlier? Let's take up this question only and that will clarify. Trust me. Okay. Let us see more questions on this only. Okay. Now, another question is, as per technical reviewer, Mr. Kanan failed to understand how management makes the accounting estimate and obtained an understanding of the data on which they are based. As per Mr. Kanan, he verified the following areas while reviewing the working paper. So technical reviewer was of the view that Mr. Kanan failed to understand how management makes the estimate, accounting estimate. Okay. So Mr. Kanan replied that, okay, he reviewed the working paper. Okay, and that is sufficient. Now let us see what is the correct procedure that Mr. Kanan should have followed. When performing the risk assessment procedures and related activities as per SA 315, the auditor shall obtain an understanding of how management makes an accounting estimate and understanding of the data on which they are based, including the method where applicable model is used in the making of accounting estimate. Okay. When performing the substantive detailed procedures as per SA 530, the auditor shall obtain an understanding of how management makes the accounting estimate and understanding of data which they are based on, including the method, including where the applicable model is. When responding to identified risk of material misstatement as per SA 330, the auditor shall obtain an understanding of how management makes the accounting estimate. Okay, understanding of the data, model and everything. And while evaluating the misstatement identified as per SA 450, the auditor shall obtain an understanding of management, how management makes the accounting estimates. It's pretty simple. I'll not invest much time because we just now saw that as per 315, we need to understand how management makes an estimate. Reviewing the working paper is not sufficient. Okay. Mr. Kanan reviewed the working papers. This is not sufficient with respect to how management makes an estimate. Okay. When I'm understanding or when I'm performing a risk assessment procedures, I need to understand the activity that management performs. I need to understand the control that management is having, not what the expert has performed. This is something, the work performed by management expert as per SA 500. Okay, I'm reviewing the work performed by management expert, but what is the work performed by management itself? What are the controls that management is having on this area? That is something missing. And hence, yes, Mr. Kanan failed to understand how management makes accounting estimate. Because in the question itself, you see, it is given that Mr. Kannan inquired, but management provided the review that provided the detail that they should consult with the management expert. They should review the work paper and they should not perform any other procedures. And Mr. Kannan accepted that. So Mr. Kannan decided that there is no need to perform further risk assessment procedure, which was incorrect. Okay, so he should have performed other risk assessment procedures. As per SA 315, in order to validate whether the work performed by the management with respect to the areas of estimates is correct or not. Or he could have gathered more evidence about the risk within the accounting estimate process. The correct option was option number 1 itself. Now, before I proceed further onto the next area, okay, I want to understand now. This is something that management has done. Management re-estimated. Okay, and this is a disclosure in FS. I want you to answer that whether this is correct as per applicable financial reporting framework. Whatever re-estimation is done, whatever disclosures are made are appropriate with respect to financial reporting framework. Okay, first of all, in this scenario, in this re-estimates or in this particular disclosure, which Ind AS, I'm again repeating, which Ind AS you will refer. Okay, if you want to today see whether the re-estimations are appropriate or not, which Ind AS you will refer. Come on, guys. Which Ind AS you will refer over here? Like, okay, absolutely correct, Janvi. Correct, Tushar. I will look for Ind AS 8. Now, what is the requirement of Ind AS 8 with respect to re-estimates? Anyone? If you have referred somewhere, Namrata, not essay but Ind AS. I was referring to Ind AS because we want to understand the requirement of applicable financial reporting framework here. As per Ind AS, what is the requirement of re-estimates? Come on, guys. As per Ind AS, what is the requirement of re-estimates? Then only you will be able to understand that, okay, whether this is correct or not. Absolutely correct, Janvi. So, as per Ind AS, okay, Ind AS 8 to be precise. As per Ind AS 8, okay, which is accounting policies, changes in accounting estimates and errors, and the effect of change of the effect of change of the accounting estimate other than the change to which paragraph 37 of Ind AS 8 applies shall be recognized prospectively by including in profit and loss account. Remember the word, mark the word prospectively. So accounting estimates are required to be changed prospectively. Okay, and by giving the impact in the profit and loss account. If the change period for that period only, and if the change pertains to the future period, then both current period and future period. And when I talk about except to paragraph 37, this talks about change in asset and liability. But again, that is also prospectively, not the retrospectively. The disclosure requirements. The disclosure requirements of Ind AS 8 is the entity shall disclose the nature and amount of change in the accounting estimate that has an effect in the current period or have to expected to have effect in the future periods. Okay. So two things, nature and amount. In the current case, first of all, management has re-estimated retrospectively. That is not correct. So management restated the liability as on 31st March, plus an adjustment made was in retained earnings pertaining to prior period. So retrospective adjustment was made. That was not correct. Number two, the data which was used for the last 10 years. So you are using the data which is available right now. If you see over here, the management used the data for the last 10 years. Okay. Means the estimates which were made in FY 2021. Okay. So I made an estimate in FY 2021 based on the data available at the FY 2021. But now when I'm re-estimating, I'm using the data of FY 21-22 plus 22-23. Because I'm re-estimating in FY 22-23 and I'm using the data of last 10 years. Meantime, I'm using the data of current years or the future years to re-estimate the previous year. Means I'm using the data which was not available at that particular point in time to re-estimate the estimates made at that point in time, which we're discussing that it should not be, we should not be doing that. Okay, as per SA 315, that is, we are not required to perform, review the outcome of the estimate based on the data which was not available at that particular point in time. And the management is doing the same. Number two, retrospective restatement is not permitted as per Ind AS 8, which is wrong. Third, the disclosure does not contain the amount. Disclosure is not having the amount of re-estimation. Means disclosure is not as per Ind AS. So the compliance with the financial reporting framework is not present. Now, Mr. Kannan, while reviewing, he said that, okay, I reviewed the working papers and he did not identify any observation, and accordingly, he concluded the re-estimate is as per the applicable financial reporting framework, which is incorrect. The re-estimates are not as per the applicable financial reporting framework. Mr. Kannan should have reviewed. While first he have reviewed he should have performed the risk assessment procedures. Number two, he should have then perform the substantive procedures to understand whether the re-estimate performed are appropriate or not. In both of the cases, he failed to perform that. He failed to perform the necessary procedures as per SA 315 plus SA 330. Plus, he did not perform any procedures as per SA 540 and SA 500. He just reviewed the working papers, which is not appropriate. And hence, he did not comply with the technical standards in India. Now you tell me the first question that we discussed, whether Mr. Kannan is held guilty of professional misconduct, whether he should be held guilty. If yes, under which clause? Come on, guys. Now you are clear that okay, why he should be held guilty of professional misconduct? Because he did not comply with the technical standards. He did not comply with the applicable technical standards in India, applicable professional standards, and relevant guidance with respect to re-estimation. So he did not perform the re-estimates appropriately. He did not audit, sorry, he did not audit the re-estimates appropriately. So under which clause he should be held guilty of professional misconduct? The options are clause 6, clause 8, or he should not be held. Option C and D are should not be held, but I know it should be held. So C and D are incorrect. Out of A and B, what is the correct option? Come on, guys. Six or eight? Pretty simple. What is clause 6 of part 1 of second schedule? Come on, guys. Clause 6 or clause 8? Correct, Tushar. So clause 6 talks about under professional ethics. Okay. Clause 6, part 1, second schedule talks about that fails to report material misstatement known to him. Okay. Fails to report material misstatement known to him. And clause 8 talks about fails to obtain sufficient information. Okay. Fails to obtain sufficient information, which is necessary for the purpose of expression of opinion. Now, here, if he fails to report material misstatement known to him, then clause 6 will be applicable, but it was not known to him because he failed to obtain sufficient information. Hence, he will be held guilty for professional misconduct under clause 8 of part 1 of second schedule. Clear? So what should be the appropriate procedure for this particular, auditing the re-estimate is, first, he should have performed the risk assessment procedure as per 5, obtaining relevant industry knowledge, nature of entities, operations, and everything with respect to that what we discussed. Then he should have, designed the audit procedures that are reasonable based on the risk assessments that we performed. Okay. So as per 330, he was supposed to design the audit procedures. Like, okay, whether he wants to rely upon the management expert, whether he has obtained the appropriate information, all such things. And then he should have, reported the misstatement that is there or the non-compliance with the applicable financial reporting framework that we discussed over here. Clear? So the reporting as per the financial the disclosure as per the financial reporting framework is not there, and hence he was guilty of professional misconduct. So it's not only this particular standard not only clarifies on one essay, but 315, 330, 508, 540, all four. Any doubt? Any doubt? I hope now your a bit of concepts will be clear based on this example with respect to essay 330, 315, and 330. We also discuss on the materiality. We discuss how we can respond to an assess risk of material misstatement. Any doubt, guys? Okay. Guys, before next lecture, please I request watch the videos of previous batch with respect to the topic. We'll be again starting with essay 500 series in the next lecture. Please watch the lectures. Please go through the material. Okay. Please be ready with the basic concepts so that it is easy for me to discuss any question over here. Okay, so that it should be easy for me to discuss the questions over here. We can discuss the questions which will enhance your clarity about the topic, which will really enhance the clarity about your topic. If you are not familiar with the basic concept, it will be very difficult for you to understand the topic itself. Trust me, you will only juggle with the basic things. So I really request you to please watch the lectures before the before next class. Okay, the previous recordings, go through the study material, come up with your doubts, okay, and then we can we will be at a position that okay, we will be able to understand how to answer a question. Things will be there, okay, theory part is there, okay, but till the time you don't understand how to apply that in a practical scenario, it will be difficult for you to answer a particular question. So I request, please watch the lectures, study material before the next class. Okay. Also, please provide your feedback. That is really important for me. That okay, whether you are liking the lectures, this format, anything additional you are looking for or you want that we can provide you. So it will be really helpful for me. Thank you, Tushar. Thank you, Namrata. So the charts and everything are already there on the portal from the previous batch, and you can access it. For the questions that are these questions that I'm discussing after completion of the lectures, I upload them. So if you see, you will find questions till essay 200 series, because essay 300 series was running as of now. The questions will be uploaded after this lecture. Okay. So if no further queries, then thank you guys. Thank you for participating in the lecture. I'll see you in the next class. Thank you.